what's going on with interest rates and what's going on with the economy and what's going on with the stock market and what's going on with Bill Shorten. I'm Peter Switzer, yeah, and I'm on my own, but I'm still mad about money. And let's start off on interest rates. Banks raising interest rates when the Reserve Bank's not raising interest rates. What's going on there? Well, historically it has happened before. The interesting thing is that the Royal Commission has really made it difficult for banks to make money because they were making money at the expense of other people. And as a consequence, banks are now finding it hard to make profits as well as they used to. But on top of that, overseas interest rates are rising and they borrow money from overseas. And so Westpac said, well, if I'm going to basically produce a reasonable figure somewhere down the track when we do profit reporting in February, we better probably raise interest rates. So they've done that. And that means the whole stable of banks, St George, Bank of Melbourne, Bank SA, Rams, and then Suncorp by itself. It's not part of the stable. They linked in as well. So this is purely about banks trying to improve their bottom line, and we're paying the price, and Reserve Bank doesn't have any power to stop them from doing this. Now, what about the economy? The Reserve Bank didn't raise interest rates. It's because the economy is not going well. Some economists think that interest rates will fall. Reserve Bank says no. And let me say this. The economy is good, but it's not great. But let me just share a few facts with you. Business investment recently rose by 3.1% to a record $118 billion. Almost 93% of ASX 200 companies recorded a profit in 2017-18. Average wages rose by 2.7%. The Australian jobless rate fell to 5.32%. That's a 5.5-year low. The Aussie dollar is now falling. It's around 72 US cents. That's going to be good for the Aussie economy. And also the NAB Business Conditions Index was 12.4, but the long-term average is about 5.7. So business conditions are pretty good. One scary thing is house prices, but the national home prices have fallen by 0.3% in August to stand down 1.6%, which is not really a disaster. As I say, the economy is good, but it's not great. Now let's go to what's going on in the stock market. I think a lot of people are scared about what's going to happen on Thursday in the US, and that is the possibility that Trump will say, yes, $200 billion worth of Chinese goods will cop a tariff, and tariff or two. And this is really worrying some aspects of the stock market. I reckon if he backs off in some shape or form, the market will ignore it and maybe go up. But certainly if he gets really serious about this, that he's going to actually do it, the stock market could sell off quite seriously. So it might not happen immediately, it might happen when he actually does it, because he often promises to do something and he doesn't do it. It worked with the EU and it worked with Mexico, hasn't worked with Canada. So the stock market is worried about that. Now, what's going on with Bill Shorten? Bill wants to extend the Royal Commission. Well, look, and he wants to give victims a chance to complain about how they're badly treated. He's doing it purely for political reasons, because the Royal Commission is great for the Labor Party's political popularity. I agree with that. But the reality is what we need to do is put a consumer claims tribunal in place so all these victims that Bill's worried about can actually get money back. Take the banks and the other financial institutions that have done the wrong thing by them, get them into some kind of judiciary situation where there are no lawyers, and make them pay. Don't do this political stuff, which Bill is obviously doing. Let's get a consumer claims tribunal happening for the banks and for the victims, so people can actually tidy up their bottom lines, and the banks can also improve their behaviour. That's all I've got to say today. I'm Peter Switzer, and I'm mad about money.